Well, good morning, everyone, as we head into European trade on Tuesday, the 12th of September, on a morning where there is relatively little for us to go off. Pretty quiet overnight session, not much movement across any of the major asset classes, also not much fresh headlines in order to drive some price action. Just reading an article, North Korea's Kim Jong-un in Russia amid US warnings not to sell arms. Not so sure I don't really care what the US have to say. Apparently Kim Jong-un is he is in Russia, but apparently he is there for talks on whether they should provide arms to Russia in their ongoing war against Ukraine. So you'd imagine North Korea will be happy to do that. You'd imagine Russia will be happy to receive that, and their partnership between them does not seem unreasonable from their point of view. But does it really shake up markets? No. Does it offer us much direction? No. Is it going to spur a big bout of risk-off trading? They're just doing a deal between themselves and there's no retaliation from the US. Then no. Even if there is a bit of retaliation from the US, I can't imagine that having too much of an impact on financial markets. Other headlines: China 2023 GDP growth forecast cut to 5%, 4.5% in 2024. The fact that that's cut is absolutely no surprise whatsoever. Still, 5% is not actually too bad though in 2023, considering the problems that they are having with their economy. Apart from that, not a lot to go off until you get across to the calendar, but we'll have a look at that in a second. But even then, calendar's not exactly driven much price action. You can see stock indexes, they're lower across the board in the US, but ultimately they're flat. The largest amount, one of them's down, is minus 0.8%, so 0.08%. If it was down 0.8%, that would be a decent move. But European equity futures green across the board, but again up 0.2% for the highest, so it's not really too much I've got to go off there either, to be perfectly honest. Asia Pacific equities, Nikkei is slightly higher. Apart from that, not doing too much. Bond yields higher across the board, but some of these, pricing, some of these haven't opened yet, but higher across the board, certainly in the US, which you'll see when we get across to the charts. They're not exactly higher across the board. They're still trapped in recent ranges, but the US dollar higher across the board. Is it higher by much? 0.37% is the highest one. That's against the Norwegian krone, which is naturally a bit more volatile. Turkish lira up at 0.3% against that. Everything else pretty much flat, albeit slightly positive. Across the rest of FX, not getting too much to go off anywhere. Sterling has had a bit of positive wage growth day. The wage growth beating inflation, but the unemployment rate still ticked up slightly. Japanese yen lower across the board, in line with US yields being slightly higher, but that's only slightly lower. US yields are only slightly higher. The US dollar is only slightly higher as well. So a bit of weakness in the Japanese yen just over the course of today is it's not too surprising. Big upside across the Japanese yen across the board yesterday, due to comments from Japanese officials that they are there's a possibility that they end their negative interest rate cycle, or end their negative interest rates, plus rumours over the weekend that they are looking at injecting 300 billion or selling 300 billion worth of US dollars to buy Japanese yen to prop up the price of the currency, as they do not seem to enjoy the price of their currency being where it is at. Apart from that, you've got the unemployment rate, as I said, slightly ticking up in the UK, which is a negative, but average earnings, consensus was for it to drop, and it actually rose, beats consensus by 0.3%. So as I said before, on certain things, it's like a bit of a football game. One team scores, goes 1-0 up, the other team scores and it goes 1-1, and you meet back in the middle. It's sort of the reaction from that, certainly in my point of view, going forward. Anyway, you can see stock indexes is pretty Monday of Mondays yesterday. S&P, Dow Jones, Nasdaq popping higher slightly, after we shut off 5 o'clock here, kind of later on in the US session yesterday, but ultimately they're still pretty sideways. The Nasdaq, I suppose, making higher lows and higher highs. If you're going to trade anything, long the Nasdaq probably seems the bet at the moment. See the S&P, the Dow Jones, albeit higher lows and higher highs, but choppy all day yesterday and into today. Choppy. Certainly the Russell's a bit choppy. The DAX all over the place. Euro stocks, FTSE, all of these all over the place. VIX kind of trending lower with lower highs and lower lows. It's supportive for stock indexes. You want to play that trade. Nasdaq longs seem the way to play it, but the US dollar sideways. You can see Aussie, Kiwi, Euro and Sterling all sideways. Negative, forgot to mention, negative consumer confidence from Australia today. Worsening consumer confidence. Anything below 100 is pessimistic, and then obviously if it continues to decrease below what the previous is, again, it's further negative, but hasn't really impacted markets too much now, has it? But you can see across the board, US dollar choppy to begin the week. You can see US yields all over the place. 10s and 2s having a little bit of an attempt through the highs in recent trade. If I zoom in, you have a quick look, but is that likely to materialize in anything? It's a little bit of a tricky one, isn't it? But there's not really much to go off. You can see oil chopping sideways. I'll have a look at oil now in a second, but not really too much to go off anywhere else. You can see gold chopping sideways, but oil might be interesting. I mean, with the production cuts from Russia, and with the production cuts from China, or I say production cuts with the extending of the production cuts, it's bullish for the price of oil. I think, or at least my interpretation of it was bullish for the price of oil. It does offset the weakening demand to come. That obviously remains to be seen, but certainly decreased supply of an asset props the price up. You then look at US oil inventories, which have nearly tripled consensus to the downside. Obviously draws and reducing supply of oil throughout the United States of America. That again reduces the supply of oil. You look to the chart and you've got a pretty clear bullish continuation pattern in the form of an ascending triangle. So you've got an idea for the market to be bullish off the back of some fundamentals. So this asset higher does make sense. Also, you look at the chart, it's a pretty clear ascending triangle, which if you're a clear technical trader, that is a well-known bullish price pattern. So that's something worth keeping an eye on. Are we, we're not exactly near being able to break it yet. We're kind of trapped in the middle of this range as of now. But if you get up here, you're going to need probably $1 worth or a percentage worth move higher. But if you do get up here, up above this resistance, up to the top, up about 88.50, I think that would be suitable for longs. Is that a trade for today? Obviously that remains to be seen, but something worth keeping an eye on. Pretty good bullish pattern. Does make sense for the asset to be higher fundamentally. Seems like a type of trade that may be worth taking. Does look a bit easy though. that is a bit worrying, but that's what the market says. You got to do what the market tells you. If you think it's bullish fundamentally, wait for your technicals to align. Technicals do align, that's your reason to get in. But that would be what I would have on my watch list today. You're getting a bit of a pop higher there on the 2-year, extending its move just above this recent high. Now just crossed above 5%. So if that wants to push higher, let it be. That would be positive for the price of the dollar. Not great for the price of oil. It's maybe a little bit of annoying in terms of that trade, but dollar should strengthen a little bit off the back of that. That move sustains itself, but I can't see it sustaining itself too far ahead of US inflation tomorrow, which will break down a little bit more when we get to it. But oil in focus today, for reasons we've just pointed out. If we can pop higher off the back of that, it certainly gives us something to look at.